Hey traders, this is Blake Morrow with Traders Summit. And with me today, I have for the very first time, Jayant Bhandari. He is a consultant for a lot of firms around the globe. He's very well known in his views, both politically and from a business acumen about India and a lot of different countries around the world. I want to welcome for the very first time, Jayant. Glad to have you here.
Thanks very much for having me here.
I was excited about this conversation because we as traders, at least from our point of view, we deal with a lot of global interest rate decisions, what's happening with central banks, what's happening with currencies. So we try to keep our fingers on the pulse of the global economy. But what I find most interesting is that you travel the world and you consult different businesses about not only India, but other countries around the world. Can you explain to us in just a few words what you do for the businesses you consult with?
Well, primarily, I advise a few institutional investors based in the US on investing in junior mining companies. I also help them, one of my clients helped them invest in the Hong Kong Stock Exchange and the Singaporean Stock Exchange. And once in a while, I get contacted by companies asking me for my help with investing in the third world.
Well, and so you originally from India, and where do you reside nowadays?
Well, I'm mostly in San Francisco. That's where I live in.
Okay, all right, and you know I've seen some of your interviews, and I've seen some of your interviews into your opinions about India. So tell me a little bit about India, the culture, the business side of the country, because as investors, we've heard this big shift from China. And, a lot of companies are moving manufacturing over to India. Tell us why that is, and tell us what your opinion is of that as a trend as a whole.
Well, there are always companies shifting from China to India, but hardly anyone ever actually completes the process. They talk about it, but they don't do it. When they do it, they get hurt very quickly, and they realize that there's something that they missed out on, and they reverse their action very quickly as well. So there is clearly a huge amount of euphoria about India right now. The international media, a lot of funds, a lot of companies think that India is the place to move to these days because they think India offers them a very high growth rate opportunity. And most of these people will get badly hurt. They will lose their monies, and they will burn themselves because there's nothing like investing in India. I have seen tens and tens of companies opening their operations and offices in India, and I have been involved in a few of those. And virtually always they lose money because India is an extraordinarily difficult place for many reasons. There is a complete lack of work ethic in that country. Skills are conspicuous by their absence. The government is from the very top, the very top to the very bottom, utterly venal and corrupt. The only thing that works in the government is connections and money. There is no infrastructure. Infrastructure is in a horrible shape. They are supposedly constructing a huge amount of infrastructure, but then bridges are falling apart, train accidents are happening because everything has a shoddy quality, with 50 to 80% of the money that is supposed to go into the infrastructure going into the back pocket of bureaucrats and politicians. So I see absolutely no future in that country. And I find it truly amusing, Blake, that so many people are so enamored by India these days.
Yeah. So, I spent many years, we had an office in Hong Kong, and I got to watch single-handedly, or personally rather, the evolution of China over the last 20 years plus, from an investment standpoint, from watching it via the markets and seeing it evolve. So where is the disconnect between, the parallels between China and India? Is it really, it just starts from the top politically, the way that the government is run?
Well, government is a symptom of the problem. The real problem is Indians themselves. And the disconnect, as you can see, it started happening in financial economic terms in the late 70s, early 80s, when GDP per capita of India was likely higher than that of China. So India was the country to move to those days. A lot more Indians spoke English and understood English those days. Chinese did not really understand English at that point of time. So the world thought in early 80s that the next emerging market would be India. And then you saw what happened. From early 80s to today, Chinese economy on per capita basis is about 5.5 times that of India. So China has grown rapidly over the last 3 decades or so, whereas India has failed to catch up with China in any sense of the word. Now, anyone, Blake, to be very honest, who compares China with India is clueless about the two countries. China is a first world country when you look at it from the perspective of India. China has infrastructure. China has a massive, good quality, high-skilled manufacturing units. It has people who have work ethic. And I have recently been in China for about 2.5 weeks, and I go multiple times a year to China. I love that country. And I can always imagine living myself in China. Actually, I'm actually thinking of spending a couple of months every year in China, whereas you can give me $1 billion and cannot convince me to live in India. That is how utterly utter hellhole and a shithole India is. And I'm using the second word not just figuratively, but literally, because half of the Indian population actually uses the open as toilets. So wow. That's the kind of situation India has. You always have to ask yourself, why did India fail to benefit from all these low-hanging fruit, all the technology transfer that was happening to China? Why did India completely fail to benefit from it? And unless you have understood that, and I repeat, understand why India failed in the last 30 years, and if you cannot explain why India failed in the last 30 years to catch up with China or actually exceed or be better than China, you don't really understand what the future is for India.
That is fascinating. So I'm going to ask you then, objectively, do you think there is any future for India and investment into India at this point in time based on your views?
So I don't invest in India. I used to follow the Indian portfolio of a fund manager at one point of time. And I sold everything in that fund. I sold everything I owned in that country. I see absolutely no future of India. India has been stagnating for the last almost 3, 4, 5 years. If you ignore the fact that they have been building infrastructure at a massive pace, adding to the GDP, while the government is actually getting into massive debt and infrastructure that actually does not produce economic value for the citizenry. So if you add all these things together, India is actually stagnating for the last 3, 4, 5 years. And I see absolutely no reason why India will do better. In fact, I'm reasonably confident that India is becoming the next Pakistan. So forget about China. India is becoming the next Pakistan, which is that it is marching towards an implosion. Now, if you want, I can happily explain to you why there's so much euphoria in the international media. But the fact remains that anyone who has objectively walked the street in India knows that India has no future, except if that person is politically correct, in which case he fails to connect the dots. And even if he connects the dots, refuses to give his views after returning to the West, because he does not want to be complaining about the biggest democracy in the world and complain about brown people.
So then I have to ask you then, As far as India goes, where do you see if the and I do want to hear your ideas on why Western media, well, I guess you just explained why, the people are going to feel the way they feel, but where is the Western world going to look towards if it's not India? Where to next outside of China? What are your thoughts there?
Well, there's nothing outside China. You can, even if you look outside China, it has to be China associated countries, which is Vietnam and Cambodia and Malaysia, and the Chinese entrepreneurs in Southeast Asia. Or you look at how China is dealing with places in Latin America or in sub-Saharan Africa. Without China, there's no growth of the kind that you have seen in the last 30 years. China is the fulcrum on which the real growth of the world is based on. Now, I have nothing to complain about the Western world or about Japan, for example, because they are developed enough that they probably don't need a massive 5 to 10% growth anymore.
Yeah. Okay. And so that was going to maybe lead me to my next question as far as Chinese growth. We've seen it slow for China standards. Obviously, if we were here in the United States and we were growing at the rate that China was, we'd be extremely happy, or most countries would be. But for China standards, the growth has slowed. Is there anything that you're seeing that the PBOC and China is going to do to stimulate their economy that might jumpstart it again and get it growing back to the rate it was a couple of years ago?
Well, firstly, every country, after 30 years of humongous growth, there has to be some overheating taking place in the economy. And my clients invest in property companies in China. We have lost a lot of money. Some of the property markets in China have fallen by as much as 50%, 50%. So there's a massive amount of correction happening in the property market. Now, should the government be stimulating the economy? Should the government be participating in protecting the property market? And my answer is no, they shouldn't, because they should let the market correct itself. They should actually let the prices stay low so that poor people can actually get into the property market and buy houses at prices that work for them. Now, a lot of people who invested in properties are going to lose money because they have lost as much as 50% of their money investing in the property market, particularly if they have mortgaged those apartments. Every educated person I know in China has parents who own 3, 4, 5 apartments in China. So there is clearly over construction that has happened in China. Chinese didn't know where to invest their money, so they poured money into properties. And you drive around China and you say, wow, that farmhouse, that community probably contains housing for 100,000 people. And on this side, probably 50,000 people. I mean, these are massive, massive buildings, and many of those massive buildings in the same area. And then just 200 meters away, there's another community similar to that. So China has clearly overconstructed. There's a correction happening. After 30 years of overheating, China is on a path to correction. I'm not as pessimistic about China, despite the fact, Blake, that I was in China recently and I talked with a lot of young people. They are extremely scared about the future of China, because they know that salaries are going to fall and they are worried that young people are not finding jobs. The youth unemployment is massive in China right now. But I prefer a government to let market correct itself than get too involved in the market. So I'm not a big person favoring government giving a stimulus, despite the fact that China is actually reducing the rate, which is actually spilling over into the gold market, because Chinese are now finding that the inflation is higher than the interest they can get, which is now a unique situation for them over the last 20 years.
Well, Jayant, what I'd love to have you do is, could you please advise the U.S. government and the Federal Reserve? That'd be awesome, and maybe we could stop meddling in the free and make it a free market too. But it is the way that the Fed operates, obviously here in the United States. But it is interesting about China; they're not even reporting youth unemployment at this point because it's so horrible and horrendous. I'm gonna ask you one other question though about the places you've traveled. Obviously, you as a consultant, you travel all over the world. You kind of clued us into different parts of Asia that you're most interested in, but where specifically are you really focused on? Specifically.
Well, clearly the Western world continues to be our focus because Western world is the place which really understands what the rule of law means, what property rights mean, what constraining the power of the governments mean. So the Western world continues to be our favorite because we can be reasonably sure about policies. We can be reasonably sure about the contracts we enter into, including contracts with the governments. So North America continues to be our favorite place. West Europe continues to be a very good place. But increasingly from the perspective of what is coming in the future, I personally prefer East Asia. I am in love with Japan. Japan is probably the most stable country on the planet today. South Korea is wonderful. Singapore, Hong Kong are great places. Taiwan is a great place, of course, with a caveat that there could be a problem brewing between China and Taiwan. And China itself is a great place. I have been going multiple times every year to China for the last 17 to 20 years, and I have seen changes happening in China. So while in Vancouver and San Francisco, the social changes have been negative in the sense that there's more homelessness, there's more drug addiction. In China, what I see is that people now hardly ever spit on the road. The society is becoming increasingly civilized, increasingly polite, and the quality of service, the quality of food you get is increasingly improving. So I continue to be very, very optimistic about China and reasonably optimistic about the stability of East Asia.
All right. Well, I'm going to leave you, or I'm going to ask you one question before I let you go. You'd mentioned you deal and you watch a lot of mining companies. Where's your best bets right now from that perspective?
Well, unfortunately, with mining, you can't tell the mine to move to a better rule of law place. So you have to go where the mine is. So unfortunately, I was in a meeting with a company with a massive project in Bolivia. Now, Bolivia has, and at the end of the meeting, I said, "Can you explain me the tax structure in Bolivia?" And he said, "Yeah, well, there's a 25% tax plus 25% tax plus a surcharge of 12.5% and plus a surcharge of 12.5%. And you add all that up and you get to about 80% taxes on your profit. Okay, what can you do?" So you have to account for, jurisdiction is what it is and mine is where it is. So that is why I travel the world. If I have to go to Sub-Saharan Africa, I go there, I go to Congo, I walk the street, I try to understand people because there's no other option when it comes to mining.
Well, Jayant, this has been a fascinating conversation. I would really, really love to have you back on the Traders Summit at some point and get your views as they evolve, especially as this global economy, continues to evolve itself. But let me ask you this: what's the best way for our community to follow your work specifically?
My website is jayantbhandari.com, and everything that I do goes on that website. I'm also on Twitter, Jayant Bhandari 5.
Well, Jayant, I want to say thank you so much on the behalf of the Traders Summit community. If you all have any views or you want to jump in the comments down below and say how you feel about certain parts of the world, please do. And make sure you like this video, subscribe to this channel so you don't miss any of this content. Jayant, I want to thank you for spending your very, very valuable time with us. And I look forward to the next time that we get to have this conversation.
Thank you very much, Blake, for the opportunity.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.